focus on the lesson. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then you feel that's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but the sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, ladies and gentlemen, I got your watch list coming in January 22nd, 2021, and the stock market got good news today. And I got 3 stocks to trade for Friday, maybe a foggy one. Today was the first official day of the Biden presidency, essentially after inauguration. Markets didn't do much. Tech still ended up closing higher, and we're going to talk about that. But overall, we saw a lot more earnings moves, but we got some interesting good news from some of these executive orders or the follow-up, and this is really going to set us up for the next few days and then wrapping up the month. So, got a couple things to talk about for today, what we are looking at for tomorrow, as well as the next week in earnings, the plays that we made today. I kind of made a bigger trade today as a mistake, but we can use the logic for some other plays, but I also have 3 stocks that I'm going to be looking at. So, let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free $99. It costs you nothing to join. YouTube.com/thestockmarket. You can post the plays, see the plays, watch the watch list come to life, and yes, if you are genuinely and generally a good person, but only get triggered when you watch political events, then yeah, we are the place to be. And the most important thing you need to do, post your watch below. Let us know what you're looking at. Got any plays, comments, remixes, anything, post them below and source that info. Shout out to Chad, baby. So right off the bat, you saw a lot of executive orders from President Biden today, but the main focus was this earnings rotation. So I want to talk about that because it is going to relate to TLT, and I'm going to show you here at the end of the video. But mainly, ever since the Netflix earnings now, it kind of stopped that value rotation, and you could kind of see the market, all indexes barely moved, and now in conjunction with these executive orders and follow-ups, we're waiting for that. But at the same time, the market has not gotten anything from the president that it has really reacted to. And then once we start to see how things get passed through Congress, that is going to confirm the main things. But as far as today, though, earnings rotation is key because you're seeing certain stocks get some of the juice and not get the juice. And even just a few weeks ago, we were seeing a lot of the growth stocks really weren't getting that steam. So now the question is the market reacting to the politics? But now it seems like a lot of it is earnings. So that's why these next few weeks are going to be key. Nonetheless, though, a lot of the information from today, or a lot of the news you saw, it had to do with policy. And this was everything from the environment, stuff we already knew with oil, all the way down to the virus and funding. And now this is that good news I was talking about. It kind of crept in there, but you could kind of get the feeling a little bit. A lot of people are excited about the new administration, or at least trying things new. So we'll have to see how far this really goes. But in terms of sentiment, I think you're going to start getting an upbeat vibe in terms of the outlook on the virus. You saw Fauci today. He came in. He's now the head of the World Health Organization, and he attended their big board meeting today. But it seems like a lot more positive tone from the virus vaccine and all of this stuff rolling out. So we have the market reacting to earnings, and now you want to see if you start to see a shift towards, hey, it looks like things are going to get positive, or a lot of people are going to start pricing in more positivity. The question is the market going to take that positively, or would that be more of a sell the news event? So we have to see. Besides that, though, all you saw was these executive actions. Again, more confirmation hearings and just getting the first 100 days kicking off. So the main thing the market was really looking at was the earnings and follow-ups, and now that is the final point. Next week, you are still going to get more earnings, and this could start kicking the market into gear, but the big earnings are going to be the week after that. So that's when I think you're really going to get things popping, and then this might make all of the indexes move once you start getting a lot more reporting companies. Again, you take a look at today, you saw big moves on certain companies. Even after hours, we got some of the earnings, but a lot of the indexes besides tech didn't move. And this is why we're talking about the rotation, because a couple weeks ago, it was the other way around, and you saw the tech stocks really beat down. So the question is it earnings or rotation? We are probably going to find out here in a week, but earnings is definitely a driving force right now. So I hope you're ready, but that is pretty much it. So let us get into the plays. So right off the bat, I have a few different plays I'm going to be looking at. We will go over the IBM and some of the earnings ones. I think you're going to get a lot more earnings run-ups next week. We'll talk about that. But as far as the first play, even for tomorrow, I got a few set of plays here that I like for even tomorrow if I want to take riskier plays. But then I also like some of these plays for earnings, and we are already holding them. So the first play that I really like is HD. I like these for earnings. Again, we're holding those leaps. We could go over those. You guys remember we bought this play, I believe, early December right here. Yeah, December 16th. We're up 14%. It doesn't seem like it's up that much, but we've talked about HD a few times. I really, really like where it's pricing and where it's at. We've talked about this 280 level, so it's kind of held up there, but I think this could be one of those earnings run-ups. Again, pay attention to how some of these stocks have kicked off the year, because you could see a general pattern of some that have either sold off like Coca-Cola, or some that have really just picked up, and then some that has stayed stagnant. So if HD breaks out from there, I think it's going to be good on the short term and the middle term, so I'm going to be watching that. The second play is going to be IBM. So now we made two different plays. We made that play at the beginning of the week. We talked about that one today. You could have made that free. We'll go over it, but then I made another play, which was a mistake. I'm going to cover that, but the key is going to be using that strategy for some of the other earnings. But now with IBM, the earnings was really not that stellar. I am going to watch for upgrades and downgrades. That's a key feature after earnings, and that could kind of drive some of these stocks or lead to a continuation, but it does not look like IBM really got the juice, so those plays are most likely clapped. However, you have till February 19th. That's why the idea is put a small amount of money into them so that you could hold them, and then you get time. You really don't have to worry about cutting losses, because it's probably going to go down a lot tomorrow, but we will see, and the key is going to be how the stock opens. Now, as far as the play, the first play we had were these IBMs from the beginning of the week. These were up 100%, so these closed even above 100% at 90 cents. I bought 5 of them. You could have sold back 3 and made it free, but I was really expecting a surprise on IBM, so I held it. Still had the $60. We were in $260 both ways. You're going to be ashamed of me once I tell you what happened, but one key I want to highlight, it moved pretty much 5-6%. This is what the market was pricing, or I think it was pricing 4%, but I disagreed with the market, and here you see the market was very, very accurate, and then that's going to even relate to Intel, which we also made a play on, and you guys will get to see. But you're seeing now, market was wrong on Netflix, but almost every other earnings, the market pricing has been correct. So maybe somebody could keep a scoreboard, and we'll see what happens. So that was the first play. Now the second play, this is where I messed up, and then my idea with this play is really just using this approach. I got caught up with the short weekend. I, for some reason, thought we had an extra day, even though I've been talking about it. I thought there was going to be one more day till the earnings. So if you were watching on stream, something happened. You saw Intel earnings come out before the market even closed. There was like 5-10 minutes. I don't know if it was an official report or a leak, but it did come out. You saw the stock move a pretty decent amount, and their report was pretty stellar. So I was like, all right, maybe that could be hinting at some IBM. So I thought, hey, I could pretty much buy this up, and then we'll get a positive Intel report and then an earnings run up into IBM, but IBM reported after hours. That was my mistake. So you could kind of see why I decided to play bigger on this. I spent $1,400. I bought 100 of these February 165 calls. I ended up holding them, even though I closed up like $700 on them. I just made the mistake. I felt really, really bad about it. I didn't want to buy a large position, pump it, and treat it like that. So I wrote it out here, but my idea was I was going to get an earnings run up. And now this is probably what I'm going to do later this week or next week on some of these earnings run ups. If we could find deals here, the idea is you play big on the earnings run up. You get some of the momentum. It goes up 50, 100%. You sell, get your initial investment back, and then you could hold a pretty decent size free earnings play. So in this case, earnings was after hours. I didn't have that happen, so I got clapped on it, or we're most likely going to get clapped on it tomorrow morning. But that was the only other play that I bought today. The other play, though, now was an Intel credit spread. So this was a short straddle, and what we decided to do was short a call and a put, because now if you guys have been watching, we've been looking at the stock. We've been saying, hey, check the market pricing. What was it pricing in? It was pricing in about $3, if you guys remember. You could even see it up here, about $3.50. And I said this all day. We've been talking about it. I even hinted at it yesterday. I was saying, well, I agree with the market on Intel. I wanted to wait coming towards close to be able to set up my play. So like I showed you guys with even IBM and all the other ones, the market maker pricing, do you agree or disagree? In Intel's case, I agreed. So if I thought the premiums were high, why would I want to buy the contracts? I decided to short 2 contracts. Now, this is a lot more riskier because it's a weekly and expires tomorrow. But how this play worked, I shorted the 61 call and the 61 put. So the idea is you collect the premium on the calls, you collect the premium on the put, and as long as it doesn't move more than both of these premiums combined, that is how you make money. So I was able to collect about $700 off 2 contracts, and the key to this was playing it small. And if we come here and make a duplicate order, you can see kind of how it plays out. At 377 credit, your max profit is 754, and your break even is $57 on the downside or 64.77 on the upside. So pretty much as long as Intel stays above 57.23 by tomorrow and below 64.77, we should be able to collect both the premiums, because because these contracts will expire. This is a lot more advanced, but if it doesn't make sense, you could kind of see, because as long as the stock stays below 61, we sold this contract for like $300. That's going to expire worthless, but then this is going to be in the money. So as long as this one in the money doesn't drop an additional $3 per se, it won't have more than $3 in value, because we even sold this one for $3 and now it's only worth $100 here. So should be able to take away probably, depending on where it closes, you're going to get anywhere from $500 to $700. So we will see what happens. But in this case now, we got to see the market pricing and we're rewarded for the stock staying the same price, or at least even following what the market was pricing in. So that was the second play. As far as the third play, I still got some I'm looking for tomorrow. Big Commerce. This one has a high short float. We're still holding those leaps. So you guys remember that play again. We even have it in the long term. And surprisingly, the long-term position kind of it came back a decent amount, but I was kind of disappointed because these leaps we bought, remember we got 2 of these October 125s, those are still down 43%. So they came up a little bit, but Big Commerce is just really in the gutter more or less. But then there was that report on the short interest. So we'll see how it picks up. I like it. You guys kind of know how it plays out. I'm already fully positioned in it. So if there is any indications of a short squeeze, or maybe we'll see how earnings comes in, I may want to average down on the leap. But for the most part, I'm going to be a little bit more patient with it and we'll see. But this is why we got time on those contracts anyways. I just surprisingly paid a lot more. They depreciated a lot faster than I thought. So we will see how that one plays out. And then finally, Airbnb. I really like this one, but I only like the range. So if you guys have been watching this, I'm still holding those shares in the long term. I got the 100 shares. It's a decent stock, but the key I've been looking at is the range here. This is a very big range the last few days. And it's bigger than when it first started. This is a key level for them. Coming into a Friday with some of the options. We tried it last Friday. It was really expensive, but I'm hoping the market makers could slip up here. So I'm not going to force it, but something with a big range like this, even on Friday, even coming into earnings, that could be pretty decent. So I like it, but those are going to be the main plays. As far as everything else, I would watch the earnings continuations. Again, IBM had a crazy earnings continuation last quarter, so we'll see what happens, but I don't have too much faith in that. Watch Apple. Those leaps came up, and this is probably going to be that next earnings run up, or a lot of people are getting excited, especially after Intel and AMD. You even saw AMD come up after the Intel report. I'd keep an eye on that, but you can see that right here. I think it might have too much premium. Again, we're going to see, but that could be a decent one for Friday, so I'm going to be watching them. Watch GHIV. It was down. It was selling off really hard. I believe the merger gets completed tomorrow, or it should become UWM, so we'll see, but it has been moving very interesting. I'm still holding this. I like it for the long term. Hopefully we get that dividend, so we'll see what happens. But if you're holding for the long term, I don't really think there's anything to worry about. But if you were one of those people from the beginning who was trying to play one of those SPAC finesses and get into that, I wasn't playing it like that. I'm not too familiar with that, so I don't know what to really look for in that sense. But I will see once this becomes UWM, and then we're going to go from there. So watch them. Again, watch the earnings continuations. You also had STX and ISRG, and I'm bringing these up so you guys could just watch the earnings premium and what was priced in and be able to say, hey, what's this scoreboard? Has the market maker been more right or wrong this earnings? So keep those in mind. Watch those HDs. Like I said, even DraftKings, I was considering closing that put sell I have and then reopening another one. So we'll see, but I thought that was pretty interesting. But I like DraftKings in general. We'll see on Friday. Ford, this one is just moving a lot. Again, all these automakers, you could even see the volume on this. I don't even know historically. I think this is one of the bigger days. So it is very interesting to see this much volume come into Ford. There may be something brewing. We got that in the money contract on the random, but very shocking to me considering they're trading at a much higher value without paying that dividend. So maybe we get dividend news or anything like that, but all in all, I'm not chasing it. We already have that random play. That's good enough for me, so I'm watching that. AREC, still holding this as a swing trade. It popped up. I know a lot of people are excited, but the best way to explain this, these risky plays, I'm putting small amounts of money in and I'm looking for big gains. So 10-20% doesn't really get me too excited because I'm using a smaller amount of money, which is contrary to the day trading strategy of these penny stocks of putting large amounts hoping for 5-10%. Y'all love that, but I'm still holding this. Nothing changed. My plan is staying the same. If I could get back my initial investment, get free shares, I'm gonna do that. Till then, we'll ride it out. So I'm still holding that one, then Airbnb, and then finally, this is the key with the rotation and everything, TLT and the dollar. So the market was a little distracted with Biden. It's getting distracted with earnings, but finally you're seeing the dollar drop. So keep that in mind with what we've been hearing with dollar competitiveness, the China currency, everything Yellen and all those people have been saying. But now TLT, remember, you're not supposed to see these both go down. So what I'm waiting for here, whether it's post earnings or leading into the big earnings, if we start to see those rates go higher again, that could be a warning shot, or maybe the Fed confirms it at the end of the month. But I want to see if the dollar keeps going down. But ultimately, if we break down here, and then this might confirm confirm either growth tech trade or that rotation back to value. So it could set us up for a lot of big things. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you ready for philo. And even if you didn't get a philo, baby, you got to know you're blessed. But the code loves you. I love you. I'm going to see you in the morning. Let's go.